Welcome to Driving Alpha, where we feature our friends, the outperforming investors who demonstrate their path to driving alpha or outsized investment returns. We're Alpha Partners, where we partner with 1,000 early-stage venture firms as their opportunity capital to invest in their best companies. Driving Alpha is supported by Affinity, provider of the CRM for the private capital relationship economy. Affinity knows who has the best relationship with the right startup. Affinity knows. Learn more at affinity.co/driving alpha.
Welcome to Driving Alpha, a podcast where we dive deep into the minds shaping the future of venture capital and technology. Today's guest is Eric Engineer, partner at S3 Ventures, one of the largest venture capital firms in Texas, with a mission to fuel transformative companies and drive outsized returns. Eric's journey is a masterclass in versatility and leadership across the tech and investment landscape. Raised in Houston, Eric earned his BA in computer science from Rice University before going on and getting his MBA from Harvard Business School. He began his career as a sales engineer at Trilogy in Austin, and then held pivotal product and enterprise roles at Microsoft, gaining a unique perspective on innovation from one of the largest tech giants. Eric's entrepreneurial spirit led him to serve as CEO of Vodo, a pioneering video commerce company, where he guided the business to a successful acquisition in 2018. Before joining S3, he was a partner at Seven Rosen, helping lead investments in high-growth startups. Since joining S3 in 2018, Eric has become a driving force behind some of the firm's most significant deals, including QBD Vision, RPO. Some of the other firm companies that S3 is known for is Alchemy and Levelset, which we'll get into and talk a little bit about later in the pod. Eric's broad experience from corporate tech to startup CEO to VC partner gives him a rare lens on what it takes to drive alpha in today's market. He's navigated downturns, upturns, steered companies through acquisition, and now empowers the next generation of founders to scale with purpose. Get ready for an insightful conversation on venture investing, building resilient companies, and the art of driving alpha right here with Eric Engineer of S3 Ventures. Welcome, Eric.
Thanks, Steve. Great to be with you and good to see you. I know I get to see you at least once a year when you come down to Austin for South by, and I know you're a big champion of the Austin area and the venture ecosystem here as well. So thank you to you and Alpha for having me.
It's been fun growing a relationship with S3 over the last, must be 7 or 8 years now.
Yep.
That you guys host that dinner every year during South by. We do try and make it down a few times a year to Austin. It's just remarkable. We started coming down about 10 years ago, and it's just remarkable how the ecosystem has grown. I just got off a call with a fellow entrepreneur and VC now who just recently moved from LA to Austin. And he just said how welcoming the VC community has been to him. And that's phenomenal. That's exactly what we found when we came down to Austin. And it's super important to just be present when you come, we're based in New York, but just coming on a regular basis and being consistent is super important and I think highly valuable. Talking about consistency, you've been doing this for a while. I'm just curious, how did you get into venture capital? Like being an operator is very different than going to the dark side. How did that happen?
As you know, there's no single path into venture, and mine was definitely circuitous. I always had a technical background. Like you said, I studied computer science undergrad, and my very first job out of school was here in Austin at Trilogy Software during the dot-com bubble. And that's where I kind of got a little bit of the bug of being part of a fast-growing business and just seeing very entrepreneurial people coming together. That company has really left a mark on the Austin ecosystem, just really recruited some fantastic folks to the area 20-something years ago, and the legacy still continues. But that was kind of the first little taste I got of that intersection. But of course, the dot-com bubble burst, and I fled to safety and went to Microsoft and learned a ton there. But in the back of my mind, I always really enjoyed that kind of early stage. I actually, at Microsoft, worked on the developer tools for the early mobile devices. You'll probably remember the Pocket PC and the very first smartphones. And so as a product manager for that, I worked with startups all the time because it was either hobbyist startups and maybe a few enterprises playing around with those devices at the time. And so I stayed close to that whole startup ecosystem that way. And when I went to business school, I said, hey, I think I want to check out venture capital. And so I looked in the alumni databases for Rice and HBS, and my newlywed wife at the time was hell-bent on getting us back to Texas. I didn't think it was even possible at the time. Venture was really Boston and Silicon Valley, not even San Francisco, right? Silicon Valley and Boston, and that was it. I was like, okay, I'll try. And I was like, I think the stars aligned for me because the same name was in both databases. A guy named John Jaggers, who was managing partners at Seven Rosen Funds, which was an iconic 30-year-old firm that had been in Palo Alto and in Dallas, because Dallas was really an innovation hub for a lot of semiconductor telecommunications infrastructure, the like. And so I just cold outreach to him. He gave me an internship after I came down and talked to the rest of the team. That internship turned into a full-time job. And that was my first foray into venture. And then I took this detour that you mentioned, being a CEO of a portfolio company of Seven Rosens that also happened to be a portfolio company of S3. My partner, Brian, his very first fund was one of his early investments. And so I got to know him, someone that was on our board, and we formed a good relationship. And he asked me to join after we sold the business in 18. Back and forth.
Amazing.
Yeah.
Well, it's sort of a bit of a journey, right?
It has been, yes.
I mean, did it take you a while to dry out from being an operator, being able to call the shots to being a venture capitalist?
You know,
Or-
it's interesting. I feel so lucky that I found the role that I have here where I actually serve two roles. I'm an investing partner, I have probably like 10 investments or so that I work with, but I also oversee a good amount of our operations. So all of the junior investment professionals report to me, our marketing and our talent functions report to me. And we went through a pretty dramatic kind of transformation as a firm, both in terms of our scale up, where we went from a single partner to 4 partners and a principal that write checks. That's a pretty big change for an organization. And being part of that has been really fun. But then also in terms of our market presence and our branding and everything like that, reinvented a lot of that over the last 7 years. And so I feel that's probably what I'm most proud of as a team and the rebranding efforts that we've done as a firm. And that's been building. And so I can get to scratch both itches, if you will, as an operator and as an investor still in this role, which is fun.
Awesome. I started my career as a software engineer and then built some software, founded a company and competed against Elon Musk. But I realized that I wasn't such a great operator and I hired a great team. It worked out in the end. But tell me more about how does that influence your investment style?
Yeah, I don't know if it's good or bad, right? Like, I think there's definitely pros and cons to having that background. I definitely feel like I'm able to connect with founders. I think it helps us win. It helps me win deals, frankly. I've been told that from folks that have chosen us in more competitive situations. I think there is a little bit of more of that kind of empathy and understanding of what it really takes and how stressful it can be and all that's involved emotionally and psychologically when it comes to running a business in terms of the ups and downs. And that, I think that has definitely been helpful. And sometimes you can go down into the details when you're getting try to be really tactical. Even in a board meeting, sometimes you get very tactical and try to solve for certain things. And so I think that has been very helpful. I think the danger has been also, though, sometimes you maybe do want to just solve the problem. And you have to remember that, no, as someone on the board, your job is to make sure the right people are solving the problems and not you. That has been something that I've just tried to find a balance of over the years.
Interesting. So pretty helpful overall.
I think so.
Could have
Yeah. I mean,
known it's becoming more and more critical to know what the engine room looks like a little bit before you start poking around. Before we leave that topic, has that influenced sort of what you look for in entrepreneurs as you're looking at opportunities?
definitely that resilience, both like the mental resilience and frankly, even the physical resilience. That's something that I am learning that my partner, Brian, who's been in the start from 20 years ago, has told me before. And I didn't really fully comprehend. Though I had lived it actually, like I had so much stress as a CEO. I even got like a mild case of shingles during the whole thing. Right. And no, I mean, I've been through it, and I know the physical toll that it can also play on people. And so I do start to appreciate, have people been through that adversity and come out the other side? Do they have a support structure around them, whether it's their family or whatever, that's really in it for the long haul? I'm also learning about if a company has been at it for 6 or 7 years, and is the CEO really going to be up for another 6 or 7 years? That's an important question versus things that are just started. And those are the little things that I'm starting to get more attuned to and understand the importance of and have those conversations up front with founders. So that's something that's definitely informed me. The other thing I think is just like the importance of hiring and is the founder able to attract and bring on people alongside him or her that can really level up the team versus just have people that are maybe less experienced below. And that is something I've started to really hone in on. And those are very kind of operator, kind of people oriented things that I think at the end of the day is what it comes down to.
looking forward a little bit, what excites you about the current market sector, area,
Oh man, it reminds me.
stage?
Yeah, I mentioned when I've been through these cycles, right? When I got into started my career was in the peak of the dot-com bubble when I was in my internships. I got paid more my first year out of school than I did 5 years later. To understand, like, like what I saw there. And so it kind of seen those ups and downs, but the internet excitement and then actually the mobile excitement that I experienced as being very early on in the mobile journey when I was in Microsoft. It very much reminds me of those periods where AI is really helping people reimagine everything again. Not only software, but then things like work generally. And so it definitely feels like a massive platform shift and has been very re-energizing for me. Because if I think back 5, 6 years ago, I'm like, all you're really doing back then was like, okay, where hasn't SaaS penetrated yet? Or where hasn't cloud penetrated? And you're going into like these industries that have been slow to digitize, which I still think is a great opportunity. I had a lot of investments as in this great in those things. But now AI opens up everything again. And you kind of think, oh, is there going to be another whole shift that happens? And so it's just fun to see that and kind of makes you feel younger.
Yeah, you get more shot at glory, right?
Yeah, just another wave, right? Which is fun. Yeah.
Right. So,
Yeah.
I mean, a lot of firms stumble on that,
Yeah.
like the shift from client server to software to SaaS enabled stuff to mobile,
Well,
you know,
it's funny you mentioned that. I witnessed that at Seven Rosen Funds. It had been around 30 years, and there were other dynamics there like, in terms of this as partnerships grow and stuff like that. But one of the things that was hard, at least with half of the team in Dallas, where it really wasn't the hotbed of the internet, you didn't really get to be part of that wave. And I think that's actually what I feel is so different even about Texas today is I don't feel like I'm missing the wave. Now, there's definitely not the same level at the infrastructure layer of AI as it is in the Valley here. That's just a fact. But all the other layers is happening worldwide. And so I don't feel like you don't have access. And so that's really exciting. So that really feels like it's very different.
that's a great segue to talk a little bit more about the Texas market. It's historically a flyover area 20, 30 years ago. Why don't you share more about your perspective? Because you've lived it.
It was a little bit of an outpost. Texas, I have to remind people, actually has a incredibly rich history and legacy around technology going back 60 years, 70. A lot of semiconductor, compact computer, Dell computer. I mean, like a lot of networking companies have come out of here. Texas Instruments, obviously, which is one of the origins of Seven Rosen Funds itself. Long history. Obviously, space has been here forever as well. And healthcare has been a center of healthcare and energy for a long time. So lots of innovation has happened here over the years, and there've definitely been these kinds of peaks and valleys as it relates to venture capital investment and focus on Texas. But I do feel obviously accelerated by the big migrations that happened around COVID, but it definitely feels like Austin in particular, but Texas overall has reached a different level where I feel it has a lot more staying power. And the thing that is interesting is obviously it starts with talent. There's so many people moving here for multiple reasons, right? And so just every day I'm meeting new talented folks that are 1, 2, 3 years in Austin and of all types. And so that is very new. And historically it'd be if you moved here, it's because a family member or something like that. Here it's people are picking a spot on the map. They just heard about Austin and visited and fell in love and came. And so that story I hear over and over again, that is very different. But then the other thing that I feel gives us lasting power this time around is just the diversity of startups that go well beyond what we invest in. At S3, we're B2B software and some med device healthcare. But if you look at what's happening in defense tech and space and robotics, in energy transition and all of healthcare broadly, CPG also, we've had $2 or $3 billion exits in CPG alone in the last few years. It's just mind blowing to me. And I love that because I always think innovation happens at the intersection of things and just having all these talented people who worked in these different spaces coming together. And then the Fortune 500 companies that are here in all these industries, like I said, that are have been slow to digitize that are now doing it. It's just a really interesting mix that I feel lucky to be part of.
Do you have any S3 focuses on SaaS and med devices historically? You see that changing, evolving?
Not really. I would say software versus SaaS because I think we do things like infrastructure and
Yeah.
clouds and I mean dev tools and stuff like that and cyber and other things that are not always pure SaaS. We've even done some IoT, subscription-based IoT stuff, but generally, yes, software. I absolutely don't see it changing. Like I was saying, I feel like there's just another whole other wave of how software is going to change the world again. And the med device and healthcare stuff has been really fun because healthcare is obviously something like 20% of our GDP. And there's a lot of innovation and opportunity for AI there. And I think actually having that history of being in the trenches of actually delivery of medicine and the stuff that we've done in med device gives us some interesting purviews. And maybe hopefully it helps us avoid some mistakes. I think there's a lot of naivety a little bit around how people are going into healthcare with some of this stuff and not realizing what it really takes to be adopted with software in there. Right? I'm excited about the opportunity, but there's also, you kind of have to go in with eyes wide open.
With the AI wave, is there any particular segment that you're excited by or?
Well, not to talk my book too much, but one of the companies that I'm really excited about, QBD Vision, that I invested in, actually was my first investment. And it just speaks to how long it takes sometimes in these, and how patient you have to be. One of the things, just as an aside, that's different about S3 is we're a single limited partner. We can talk about that part,
I was
but
going to ask you, yeah.
yeah. And so
Why don't we come back to that?
yeah, we'll come back to that. The reason I mentioned that is it allows us really to be like very patient capital. This is a great example of where we knew when we invested in QBD, they were going to sell software into pharmaceutical industry and life sciences to help those companies develop and scale up manufacturing, all of the workflow software, reporting, all that stuff. And it really was in the realm of spreadsheets and PDFs and unstructured data. They're creating proper, almost like an ERP for that part of the industry. And I remember Yash, who's the founder there, his pitch deck had this wonderful slide that showed all the industries and how slow they are to digitize. And pharma was the second worst, government was the worst, that it was bad. And so it's kind of like, hey, this is an opportunity, but you also have to have patience to do this. You can't call it like when it tips over, but we really wanted to be there. And so partnered with him very early on to do that. And we fast forward a few years now, and some of the world's largest, most valuable, I think 4 or 5 of the top 10 are working with QBD Vision on a mission critical part of what they do, which is scaling up their manufacturing in these global environments. And these are in like the GLP and Alzheimer's drugs and things like that are huge, huge markets. They're explosive markets that being first to market is everything, right? Billions of dollars of value. And so we're really excited about that. And so I just think these kind of inefficient industries, slow industries, SaaS helps, but a lot of the reasons SaaS alone can't help, I think a lot of it is the AI stuff that's going to come on top of that's really going to be transformative.
Right. Do you think there are any going to be laggards in the AI wave industries that
Well,
we don't use
it's interesting. Clearly, I mean, just like everything else, and pharma is one of these, it's regulated and it's high stakes. So I think picking and choosing how you, like what you, like where you focus and then how you do it, I think you can still use AI in even high stakes situations if you engineer it right. And I think that's the opportunity for startups, really, like vertically oriented startups in those spaces. Things that are more generic, horizontal, you're always running that platform risk of whether it's OpenAI or Microsoft or someone else just eating into you on those things. But very vertically oriented, high stakes things where there's regulation and stuff like that, I think is the opportunity in a lot of cases for startups. But you have to kind of have that patience and build those guardrails.
My first company that I ran was a software company focused on the newspaper industry, which is the slowest adopting sector of all. And like in the late 90s, when I provided my solutions with Elon Musk, Elon ran a similar company. It was like a giant yawn, like internet, this will pass.
Right.
And ultimately they got crushed. I feel like this time around, we're an investor in a company that AI piloting fighter jets. I feel like that would have been the last place to adopt before. I feel like the resistance there's a little bit more fear of missing out in the industrial, every sector, like mining and like where historically there were laggards, but now it's like deer in the headlights. The CEO talks to their VPs. What are we doing with AI?
It's definitely that. It's exciting. There's also like a word of caution around how much of trying to be very careful about not being head fake by some of this also, where there's a lot of interest. Clearly boards are asking CEOs who are asking their executives who are pushing down these mandates. And so there's a lot of interest, a lot of discovery calls and pipeline building and even deals that are really POCs and stuff like that. And the question is, are people going to really adopt? First of all, does the tech actually work? Because I think that's questionable in some cases. Is it actually getting you all the way there in the way you want or partially the way there? And then are people going to adopt and renew and are you going to see a lot of churn 6 to 12 months from now? I don't know the answer to that question, but there is that risk for these businesses. And I saw that in a microcosm with VR and all the excitement about metaverse and stuff like that. I was company in Voto that I operated in was in this digital content visualization space. And everyone in that space was like, oh, every CMO had to do something with VR just to say that they were doing it. Right. And then suddenly that all went away. I don't think that's this necessarily, but there is this little bit of everyone has to kick the tires and then the real stuff happens.
Tell us more about that S3 special sauce. You mentioned you're a little bit different than other firms.
For all 20 years, we've had a single limited partner, a highly philanthropic family with a multi-billion-dollar foundation. And we have been, from when we started, I think Brian's first fund was $20 million. And now we manage just under $1 billion of their assets overall when you look at committed capital and what's deployed. And that has been a fantastic relationship. And it has really great benefits for our founders. One is, as senior partners, we're not fundraising. The amount of time that saves us, Steve, is immense. And resources, right? We don't have a big back office for reporting and all that other stuff for 100 LPs or whatever. So if you think about all the time and money that can then be directed towards portfolio, towards community, that is a huge win for everyone involved. It's like a tax that's removed. And so love that. And then the second thing we can do is we don't really have reserve constraints or any timing weirdness in how we operate because we can extend the size of our funds and we can also invest across funds because it's one LP, right? And so that comes into play a lot in like environments like today that we're in right now and what I experienced when I first got into VC back in '08, right? Where you have a lot of extension rounds and you're dipping into reserves and things just take longer. And I think we can be more aligned with long-term vision and more steady partners to our founders than folks that might frankly just run into capital constraints and also deal with the politics of it. Anyone who's been in a VC firm knows this at the end of these funds, it becomes a little bit of political and or kind of horse trading around whose baby has to die, right? Unfortunately.
And is that not the case at S3?
Well, everybody, well, not everyone lives, but I think there is a little bit of, we always have to do good kind of proper portfolio management and be clear-eyed and lean on our partners to be objective. 100%. That's just good management. But it's not like where you have two equally deserving, but you can only pick one. It actually happens, right? Like fundamentally. And so that I think is really nice and a luxury we have. And I feel lucky, but we have to be careful. It's a slippery slope. Absolutely. You can't fund everyone either. So it's a challenging thing in ventures. One of the hardest things in ventures, my partner Charlie says, is those decisions at the end there. And I think all firms are with the exit environment right now are having some of these conversations.
Right. Do you have like a 5-year cycle or like discrete funds, or is it just like on a carry basis? Do you guys
We do have discrete funds because the partnership structure changes, right? As partners become more senior and the economics change, that's what's nice is we're able to have that fund structure to allow for that. But generally speaking, we are kind of freed up in these other ways.
Is carry calculated on cohort basis then, or?
We have actual funds and it's carried.
Yeah. Oh, I see.
Yeah. No, it's actually, that is all the same. I think of it as like, it's a single LP venture fund, just like you would normally imagine a venture fund. It just has that one LP and that gives a little bit of that flexibility I was mentioning earlier. On the timing, that is also pretty flexible, right? It can happen. It might be based on how quickly we're deploying primarily, but also maybe aligning a little bit with what exits we've had and when's a good time to have that conversation.
You can be a little less worried because you have one LP.
Yeah.
You can talk to that LP and say, look, we can deliver back X millions this week if you want, but we'd suggest waiting a little bit while or whatever. And LP, it's like, okay.
And also conversation, right? Yeah. And when we have big positions and things like that, which we have with IPOs and stuff, it's a much easier thing to optimize for what's best collectively because it's just fewer parties and fewer misalignments.
And how does that impact decision making? Is the family involved? Is the foundation involved?
We write memos, but we really operate autonomously. There's technically, I guess, a veto power, but it's never been used kind of thing. And no, we operate like a normal venture firm in that way, where the partners, and we're very much culturally, we don't do voting or anything like that. It's very much like we have conversations, we ask each other the hard questions, but at the end of the day, the partner can make their decision through socialization and consensus building.
You know, one of the cool things that I've learned as a VC talking to a lot of folks on this podcast has been just getting a sense of the different styles out there of decision making. And it sounds like you guys fall into, you trust the partner to make the decision. And they listen to all the different views. But ultimately, is that the partner decision or is it a collective or a consensus where there's a majority or
Like I said, we don't vote, but I think we definitely ask hard questions or make points. But at the end of the day, I think there's enough respect and trust in each other that if someone has high conviction and they want to go forward, no one's going to be laying on the tracks. I haven't really heard that happen in my time here. I think and I think that's super important too, again, just from conversations, from podcasts like this, like hearing other VCs talk over their career, talking about 20, 30-year careers, so many of the best investments were the non-consensus investments.
Yeah, that's what I'm delving
Yeah.
into.
And I believe that. And I believe I'm going to be wrong a lot. Right. And I'm not going to be the one, but I do think we owe it to our partners to maybe push a little bit harder to make sure that to test that conviction. But then if they have that, despite that pushback, then you absolutely want to see what happens there.
Right. That's cool though, like as an entrepreneur, to know if I'm sitting down with you, Eric, and you're saying, hey, we're in, they don't have to worry about as much. Obviously, you got to talk to your partners, but they don't have to worry about some veto from coming down and
No, there's nothing like that. There's no last minute. Yeah. We don't have that like the hidden investment committee that you don't even know about kind of in the process. That never happens. We do have, like most firms, right? You still have the founding team present to our partnership, all our partners, plus some of the principals, VPs as well. We really actually like to include, we can't invite the entire, we're a team of 12, so we don't invite the whole the team to every meeting, but probably half of the folks are there, and to try to get a little bit of a diversity of opinions. And so we still encourage everyone to understand the business. We are, even leading up to that meeting, updating the whole partnership through mini memos and other things like that along the way. And so everyone is expected to come in to those meetings prepared and understanding the business at some level. And then we spent these are usually multi-hour, like 4 or 5 hour meetings that we're all together with the company. And so everyone kind of should have an informed opinion for a discussion. So we try to tap into it. So I wouldn't think of it as like a solo partner just making a decision. It's like everyone's informed, but then at the end of the day, that partner, they have to retain that conviction.
yeah. No, I think that especially for earlier stage opportunities, one man's riches is another man's poison. There's a fine line at the earliest stages. It can go either way.
Yeah. And things that didn't work 10 years ago do work today. That's the other thing. It's always hard. Right? There's some biases, or I'm going to redline this space because I had a bad experience 10 years ago. And sometimes there's a lot of wisdom in that. And sometimes it's apples and oranges because the facts have changed.
So what's your typical entry point in terms of stage?
We say we do seed A and B. Seed for us is post revenue. So you still have a few, I like to say, like you're probably in an enterprise setting, probably 5 or 6 customers that are paying you non-pilot revenue. We did pilots, they converted. So that's usually a couple $100,000 a year or more. We will come in earlier than that for repeat entrepreneurs, for special teams and special markets. We've done that. But I'd say kind of our more regular seed looks like that. And then we will also lead an A. I call it like a Texas A, right? Like $3 to $5 million size check, and a B where we can write $8 to $12 million initial checks at those, So that's just the reality of the round sizes for the most part, not always. I will say those would also just depending on the sector. I did a seed recently where I wrote a $5 million check into a seed. So it's not like it doesn't happen, but it's, especially if it's like infrastructure, it takes more money, takes more time, adjust.
What your typical investment size is? So
Oh yeah, well that's what I was saying.
million.
Oh yeah, so it could be anywhere between 1 and 10, $12 million checks, depending on
Got
the
it.
stages. Yeah, yeah.
And what's the best way for an entrepreneur to get in touch with you?
We take a lot of pride in being very accessible. So if you're in the Texas ecosystem, we are either attending events or hosting events all the time. LinkedIn, if you just say you're based in Texas, you're going to get a response. Like if I sometimes will get stuff out of some random country. That's like, I'm not going to respond to everything there. But if you're in Texas, you're definitely getting a response. Middle of the country, especially because 50% of our investments are in Texas, but the rest tend to be in the middle of the country. So as long as you're mentioning your geography and it's a sector fit, I think there's very high response rate there. So we try to be good about that. And we have a pretty sizable team, like I said, of associates and upward that do outbound as well. And so we try to see everything that we can in our markets. So hopefully that's not an issue for founders.
No, that's great. I'll now on to something completely different before I let you go. What is it that you wish you'd known that you know now as a seasoned VC? What is it earlier in your career you wish you'd known?
I think as I'm going through this a little bit more, like just having a greater appreciation of founder longevity and team, I think, and being a former product manager, I would get more enamored by the product and the market and not index enough on that. And not that I don't think I ever invested where I didn't feel strongly that the founding team would be successful in the near term. But I'm learning that you can't like make a change at the top very easily until you get probably past 5 million of ARR or more. It's to hire someone in to come in earlier stage when things aren't working with the founder and someone whose success could actually make a difference and be a strong person. It's a little bit hard. And I'm learning that I really want to be backing folks that I think can go hopefully at least a B, right? Hopefully all the way, but that's rare. And that they are also have that understanding and kind of conversation around that. And we're going to try our best to make them successful, but they also are surrounding themselves with the right people along the way. And that's something I think had more appreciation for.
How about as an entrepreneur? Is there anything that you wish you knew earlier in your career that you...
I made so many breaks. When I became CEO of Finvoto, I was in my 30s, and it was a little bit of a thing of circumstance more than anything, and learned so much. Again, I think one thing I was very fortunate in that environment when I kind of went through some ups and downs was the founder was still beside me the whole time. And I can't understate how important it is to have that founder energy in these businesses, whether it's for product vision or just that kind of culture, energy, positivity. Again, you need someone that's doing that, especially in situations when it's hard and there's maybe an executive that's really trying to clean things up and fix the stuff that's broken. You get a little bit more operationally oriented, but you also have to be motivating and exciting and keep people in the boat with you through that process. And having, whether it's the founder or someone like that, alongside the more tactical ops person is very important in those situations. At the end of the day, companies are collections of people, and they all have to be excited and be willing to make a lot of sacrifice to make something special happen. And when you hit bumps in the road, you need people that can keep that all together.
That's interesting. Have you ever heard the term founder mode?
Yeah, absolutely.
All right. So there's a little bit of interest there. What do you make of that? Is that sort of in line with how you see it, Jason? Or
that? Yeah, I think the founder mode stuff was more about where you have to really wartime versus peacetime, that kind of stuff, which I've also experienced. And I would say there's absolutely that. I've been through cycles of where you've had to like cut companies in half. I had my first day as CEO, I had to cut the business in half. I had people that I'd worked with for multiple years, and it's very difficult to get through that. But the thing is that there is something to be said about making hard decisions fast, pushing through bureaucracy that is formed in an organization, or risk avoidance. You have to sometimes do that. And oftentimes, founders are the ones that are the best to do that in many cases. I think that's accurate. It doesn't have to be the founder, but someone has to sometimes make hard calls.
Well, this has been amazing talking to an OG, the Texas venture ecosystem. I really enjoyed our conversation here. This is great. Thank you so much, Eric, for your time and your efforts and your true, authentic desire to help grow entrepreneurialism in your ecosystem is phenomenal. So
thank you. I appreciate you having me on your platform here, and I've always enjoyed listening to these and hope to listen to others in the future too. Thank you.
Super. Thanks, Eric.
Bye-bye.
Thanks for listening to the Driving Alpha podcast, where we host top investors to demonstrate how they outperform the market. Click subscribe so you don't miss future episodes. Driving Alpha is supported by Affinity, provider of the CRM for the private capital relationship economy. Affinity knows who has the best relationship with the right startup. Affinity knows. Learn more at affinity.co/driving alpha.